Alright, so good evening, guys. Sorry, today's session might be a little, I don't know, I'm saying a little. Today's session might be very, very short. Today's session might be very, very short because today is going to be the last theory class we're going to be having, and whatever we're going to be doing afterwards are going to be strictly, what do we call it? They're going to be strictly live trade. Right. So in the last 2 weeks, we were supposed to start our live trading session, but we couldn't start because of one or two issues. So we just had to push it. And I'm going to possibly, I don't know if you guys can hear me. I permitted a couple of you to speak. Can you hear me?
Even yes, we can.
Can you guys hear me?
Yes. Good evening.
Hello?
Hello.
Can you guys hear me? Aliyu, is it Aliyu, right? Okay, I think I'm the one that can't hear you guys. Sorry, give me a moment. I think I'm the one that can't hear you guys. What the fuck is wrong with this headset? Hello? Alright, can you guys hear me?
Yes.
Alright, now that's better. Alright, so back to what I was saying. I said we couldn't host classes in the last 2 weeks because of the outage in the north. It's kind of affected me to a large extent, so I wasn't willing to trade without constant power supply. So I had to just use it as an opportunity to rest. As personalize it as an opportunity to rest. So okay, so like I said, today is going to be the last theory class, and this class might just take 20 minutes at best, and we're over. Right, so I just want to point something important to you guys out. Right, so just recognizing patterns on the chart. It's just not when I'm talking about patterns, I'm not talking about candlestick patterns. I'm talking about patterns like what has been recurring and like what has price been doing. And basically, you have the knowledge, you know what to expect at certain levels. But then, even with that knowledge, even with the knowledge, there are still things price like would do on the chart. Okay, this is something I do most times before I want to, let's say I want to start a proper trading day. I actually try to recognize a couple of patterns. Let me share my screen so you guys can see what I'm talking about. It's not be like I'm speaking rubbish. So I want to start a proper trading day now. Most times I go, this is GBP. We're going to use a GBP pair I've not traded on before. So let's see. I don't think I've ever used capital.com. So let's use this. Because let's say I'm starting a trading day like this on the 4 hours time frame. Now, what I want to know is I want to identify the areas where price rejected from, the areas where price rejected from, the areas where price retraced to. Alright, those are important things. Now, in a price action like this,
Please record it. Sorry.
yeah, I think the session is recorded. I've already set it to start, so this whole thing is recorded. Now, in a price action like this looks a little choppy, and we know we can expect something like this to continue, right? So what we're going to be looking for in something like this is the very moment if you come to this chart, you want to see what price has been doing. You want to see that where price has been retracing from, where price retraces to, because it's going to help you know your targets if you are getting a what do you call it? You are trading against the trend. So it's going to help you with your targeting. Let's go to our slide instead. Right, so it's going to help you with your targeting a lot if you are trading against the trend. So look at this, for example. Let's start from here. So can I go later? Someone was calling me. I'm very sorry. All right, let's continue. So now something like this, yeah, we can see that every time whenever price moved like this, right? Whenever price swept out liquidity, but also a valid liquidity sweep, something like but also a valid liquidity sweep, so a continuation to the downside. Right? Look at this, for example. It's not about just knowing the whole concept. In as much as knowing the concept, it's not every peer that the concept plays out on as it's supposed to. Sure you get. Now you have to also know like how each peer reacts to everything. Look at this. sweep, continue, sweep, continue. See another example here. This is a third example, sweep, and then it continues, right? Now the next thing we're going to be looking for is after the sweep, where did it react off, right? After the sweep, where did it react off? And we're going to be doing that in respect to the previous sweep. Are we together? Now look at this, for example. Let's say this was the previous sweep. We're going to be doing in respect to the previous sweep. So we're going to be using our Fibonacci tool from this point here. Now we're going to draw it down. We're going to draw it down to the last low that was created, which is this point here. So we just draw it out so we can see. Now you can see rejected from the between 0.5 and 0.61 level, right? In this scenario. Now let's do it for the next one. We'll do it for the next one again. To see the next place you rejected. Now this is going to give you an idea of what to expect from price. The next low that was created was over here. Okay. So this one just slightly went above, right? Okay, we're looking at the liquidity sweep, and this was liquidity sweep. Yeah, still between 0.5 to 0.618 level. Still between 0.5 to 0.618 level. Now we already know that that is a zone that. Now if you keep doing this consecutively, you check for the areas where it had happened. Like let's drop down against the 1 hour time frame and just get more examples. So the more examples you have, the more times you see it. The more times you see it play out, it's more or less a confluence whereby you know that once you see it trading back into 0.5, 0.618 level, you should be expecting a retracement from there. And once you've gotten that retracement, you can start looking for your entry. Now, in a situation like this, after this happened, we saw it retrace from that 0.5 between 0.5 and 0.618 level. That zone can now drop down to our lower time frame, possibly let's say the 5 minutes, or let's go to 15 minutes first. Drop down to 15 minutes time frame, and we'll now be looking for our entry. Now, even for the entry, GBP has a way of doing its own nonsense, so you can still go back again to just check what entry model GBP has expected most in the past. Now, this way, you're going to have less tendencies of missing your entry. Now, look at this. Let's start from here. As usual. Now, this is just basically how you recognize your patterns, and it works on, let me say, literally every pair, because every pair has its own patterns. Now, you understand the concepts to it, but now this is more or less you trying to put it all together. Are we together? So now, on this time frame now, you can see top low created this low, right? This low was created, returned, and it broke it. So this was a short-term low, but then the short-term low wasn't triggered. It didn't come back to trigger the short-term low, and we saw it's retracing. So now we're going to be trying to figure out what entry model, and here it just came back to this, what they call it, came back to the inefficiency, 50% of the inefficiency, and sold from there. That was after the liquidity sweep. Now let's look for the next liquidity sweep and see what it did at that point. So that is the same thing. Okay, that was the first one. I think I got 3 liquidity sweeps. Yeah, this was one. Where's the second one? The second one. I think I had 3. If I'm not mistaken, was it 3 or 2? Yes, it was 3. Good. So here's the second one. Here's the second one. Here's the second one. So it came, created the short-term low again. Created the short-term low, but this one came revisit. So then come back to revisit, did it? Okay, yeah, it did actually. This was the imbalance, right? Let's see to be sure. This was an inefficiency. Right, this was an inefficiency, but it didn't revisit the 0%, like the middle. It didn't really revisit the inefficiency, but then it sold from here. But then those are the things you look out for. You look for these patterns. Look for these patterns. Now, sometimes this happen. You can still drop down to the 5 minutes time frame to understand why it happened the way it did. Right? You might still go down to the 5 minutes time frame and notice that that same level was respected. So now we're on the 5 minutes time frame. Just zoom out a bit. Just to go back to understand why it happened the way it did. So this was it. This was the level here. This was the level here. Sweep. Low. this was an imbalance, inefficiency, but price didn't revisit the inefficiency. Price picked its order from this inefficiency here. But why? But I don't know if you're getting my point. The point here is you just want to revisit, you just want to see what price has been doing. Now it's going to give you a better idea of what to expect. It's not going to tell you precisely that this is what to expect. It just gives you a higher chance of not getting a missed entry. It gives you a higher chance of knowing what to expect from price and not getting stopped out of your position before it runs in your direction. I don't know if you understand. So these are some things that most times I do it, let's say at the beginning of the week, beginning of the trading week. If I'm because I don't trade on Mondays, so I could do this on Monday and I'll just continue my trading on Tuesday and consecutively. Sure you get. But then this is something that you can just do every week. And I try not to trade on Monday because Monday market sometimes is I don't know how it behaves at times. So look at this. This is a third example, a short-term low. The short-term low was created and it was broken. The inefficiency was over here. This was the inefficiency. And also price listed inefficiency again. So in this scenario, this one was respected, but I don't know why the second scenario didn't respect. So something like this, if you get a fourth opportunity, you can still go in with this same concept. You just wait for the liquidity sweep, wait for price to take out a short-term low, and you're going to enter from the imbalance. It's something that you just settle down to. It's something that you just study basically. I don't know if you understand. So it's just basically you recognizing the patterns, you know the concept, you know what all these things means, you know what to expect from these things. But not all peers expect the levels the way they're supposed to expect them. I don't know if I'm making sense. Are you guys with me? I guess with me.
Yes.
Okay, so now this is on GBP USD. Now let's try the same thing on Euro USD. Let's try something on Euro USD. As usual, that's not the first time, right? So we're going to Euro USD. I'm going to use my pay I've not used before, so let's go to capital.com. So, excuse me. Alright, so on Euro USD, okay, this is it trying to, I think, is it trying to change? Is it trying to change its character? Yeah, it's trying to retrace. It's trying to give us a retracement over here. Anyways, we'll see EU buying for a while, possibly to okay. Sorry, give me a second. I don't know. Sorry, my network is quite slow. My router, I don't have access to my router right now, so I'm using my phone hotspot. So that's why the internet is a little bit slow. Okay, so we could see this retracing back into this imbalance possibly. Right? Let's draw this out. And anything we are doing, this is going to be where our interest level ends. Anything I'm possibly going to do, if I'm going to ever be looking for a retracement on you, my interest ends at this point. Right? So let's go back and look at the patterns as I said. So here, so we're looking for the basic liquidity sweeps first. So it's the normal thing. Now this here, okay, this isn't a power of 3 candle. It doesn't pass as well. Let me just liquidity sweep. Now there's something else I need you guys to understand. When you're doing in terms of pattern recognition, right? When the market is moving along its trend, when the market is moving along its trend, which means it's let's say the trend is bearish and it just keeps selling, it's different from when it is retracing. The patterns are never the same. I don't know if you understand. So some of what might have worked in a bearish market possibly wouldn't work in a bullish market. So that is why you have to also like try to understand the different patterns. So something like this, in a scenario we're expecting retracement, you're going to want to come and check what happened when price was retracing the last time. Because they said history is bound to repeat itself. And that is the basic idea behind trading. The basic idea behind trading. All these candlesticks we are seeing are prices. So yeah, prices at the commodity visited in during the last trading sessions. Sorry, excuse me. So yeah, I'm just going to mark out a couple of this. Just mark out a couple of this. So let's see. So we just have to. Okay, here's the third one. So just marking out a couple of these. So basically after. Now the next thing is we're going to drop down to 15 minutes and come to that point. 11 September. Let's do 30 minutes instead. Let's see. Okay, here we are. So here are the levels I marked out. So my network is a little slow. Perfect. So as usual, we're going to check what the price do after the sweep. After the sweep, what did we see next? Did we see double sweep? Like, did we see multiple sweeps? Did we see just price retracing? Did we see just breaking structure and picking? Those are the things we're looking for. So, sorry. So here now we're looking at this. You can see price didn't really come back to visit. This imbalance was only visited once, and that was from this short-term high. It was broken. Well, in this case, a short-term high came to play because this can be counted. This counted as a short-term high. So it came to play, and we saw price revisiting this like this. So price revisiting this level. So price revisiting this level. So price coming back to tap to pick itself from there. Now this is a short-term high coming to play. This is example one. The next one. So basically, we know that in EU, price broke, created a short-term high, revisited, and continued. So let's check if the same thing happened the second time. So here was a sweep. Okay, this created a short-term high, and it doesn't look like price came back to revisit it. Doesn't look like price came back to revisit it, but a lot of other action was going on down here. But in this scenario, price didn't really come back to revisit it. We can't really see any retracements to come and pick it, but then there were still other minor moves that happened below. Probably if we go down to the 15 minutes time frame, we could see the short-term high being created, price come back to mitigate it and whatnot. But this didn't happen here, didn't give us what we're looking for. I think this just consolidated a bit and just continued upward. So let's just cancel that. And this is a third example. This was a proper break of structure and price traded back into the imbalance. Proper break of structure, price traded back into the imbalance. It even went as slow as going into the original order block. So we're going to mark this out. So basically now we have two scenarios, the short-term high scenario and the proper order block scenario. Right? Look at this structure here. Look this. Give us a liquidity structure. Okay, I don't know if I ever told you guys this before, right? But then once you see something like this, right? Something like this happening. This is something like this happening. In a scenario like this, some people are going to want to say this is another block, right? Some people might want to classify this as another block, but no, it isn't. Because this low will definitely get taken out because it is now targeted. It's going to definitely get taken out. I'm going to be looking at one below before happening in this scenario. I don't know if I ever told you guys this. So if you see something like this, you always look for the POI and rests below. Right, so that was what came to play here. So we saw that happening. Now you could also do this to look for continuation patterns even within the trend, aside the whole because here this is what I've been doing. I've just been looking for more or less retracements, reversal trades, right? So even within the trend, you can still look for continuation patterns. You still take your time and look for continuation patterns. that repeats itself. So now here we could just draw out. We're on a very short bullish. So why is that? Okay, that was the level, that was my target. So I'm coming, we'll come back down here, and let's say we could look for our own entry on EU off the information we have so far. But I think we are quite late because whatever is going to happen has started happening already. So I would say we are late. But then on your own part, you go and check it because it looks like it might continue buying for a while. So and then you could just go back and study it. Here, this was okay, so this is short-term low. This was a short-term high that was created rather. Also price coming back to mitigate it, like the first scenario. So price came back to mitigate the short-term high that was created, but it didn't mitigate it totally, but the high was taken. So price came back, revisited it, it's continuing upward. So you could see it running as high as this level here, the level I marked initially, that is here, the 0.5 level of the entire price action. You could see it running as high as that level. Now, this is a scenario, this was a liquidity sweep, a proper breaker structure. So I think we saw a similar scenario like this, and from the similar scenario we saw, possibly price could come back into this level here to pick order as well. It wasn't exactly like this, but it looked similar to this. Right? That was the one with the sweep. This wasn't a valid, this wasn't a bit of structure. I thought it was more or less a sweep. So this level here, it's targeted already. So expecting price to take it out and maybe run down into this level. That's my long position. So probably run down into this level. Stop loss somewhere here, and maybe take profits could go. That's it. Just target here. This could just be a targeted level. You see price running back down there. Just mitigate it. This might take a while though. This is 30 minutes time frame. So it might take a while. Just mitigate it. Pick up orders here and run up. Now something else you guys must understand is that this level here price might still sweep this to come down and mitigate this. That is why I put this. Okay, I didn't put the stop loss over. Or first put the stop loss here. That is below this candle. So even if price comes back down to mitigate this level here that wasn't taken out initially, this level here, this is just me playing safe basically. So this level here, if in case price has to come back and take it out and mitigate it rather, we're still going to be safe because we are still going to be within the trade. So everybody with their risk appetite, some people can decide to take their trade and just put their stop loss down here. Because I think that's the safest point. So everyone with risk appetite, this is a 4-hour trade, a 4-hour setup. So I don't know which together, guys.
Yes.
So I'm just going to screenshot this just for the sake of record. So I don't know, is there any question so far on this pattern recognition thing that we just spoke about? Doesn't look like any question at all.
No.
Guys. And then so just basic. You open your charts, you know the concepts of the top of your head. You know what prices do at most of these levels. Now what is left for you is to know how it reacts on each pair. So now that is where the pattern recognition comes in. This is how you do your back testing. When you're back testing, you go through your time frames, you go through your time frames. You mark out key zones where you see rejection, key zones where you see retracement, key zones where you see major moves and stuff like that. You just take note of them. You take note of them. You understand what level they rejected from, what level they traded into, and all those things. So it's just basically what you do when you're back testing, and it's still the same thing. So most times I like to wait for Monday because I'm a scalper. I allow Monday market to do its thing. Then I can run through this on the 5 minutes time frame on the Monday market. Because I think sometimes every week comes with its own unique price action. So it's something you just try to take note of before taking trades. I don't know if that makes sense. Okay, then since there are no questions, I guess this will bring us to the end of today's session. The next session I'm going to be hosting is going to be a live trading session. I don't really know. Okay, tomorrow is NFP. I might want to trade NFP. So if I'm going to be doing that, I would let you guys know early in the morning. Let you guys know in the morning so that we are going to host a session where we just try to analyze the market together and see if we can catch a trades on NFP. But if I'm not going to do that, I'll still let you guys know tomorrow morning. I don't know if that's okay with you.
Fine. Yes.
Alright, guys. So I think this brings us to the end of today's session. Any question? I can end now.
No question from my side.
Right then. So good night.
Right, thank you.
See you in the next session.
Good night.